What's up, Chad? This is Justin, Elevate Credit. Today is day 244, the basics of a credit score. So, thank you guys for following this journey from day 0 to reuniting my wife, my son here in the U.S. We're talking credit consulting, business funding, real estate investing, just taking that next step to achieve that next level. So, today we are going back to the basics. It's easy to, go off on a trend and get very detailed and very niche in a space, talking about consumer law 15 USC 1681 SAI, talking about responsibilities of furnitures, and some people just don't even know what that is. So some people are just getting to the credit space. So today we're going to go back to the beginning and talk about credit basics, specifically the basics of your credit score. So what you have to remember is that the banks, the institutions, and the lenders report information to your consumer report, Experian, TransUnion, Equifax. FICO, Advantage, your credit scores, calculate your credit score based on that information from your consumer report, right? They're all not the same. They are not bureaus per se. They're not affiliated with the government in any way. These are all individual, private, for-profit companies that mine data and kick off a credit score. And what you have to remember is that your score is derived from this consumer report, which contains data points. There's 5 of them, right? The first one is payment history, right? That's 35% of your credit score. It makes up 35% of your credit score. It's an important one, right? So if we have late payments, we can remove them. 3 or less, I always like to remove late payments. If it's more, if there's a ton of late payments, and there's no sense in salvaging the account and keeping the account on the consumer report, I dispute to remove that account. Just go ahead and remove it, right? So the second data point is utilization, right? Your utilization rate, that's 30% of your credit score. So your utilization is the amount of the credit that you're utilizing based on the total credit available, right? So if you have 2 cards, $5,000 each, that's a total of $10,000 in available credit, right? And if you have a balance of $1,000 on one card and $2,000 on the second card, right? That's $3,000. That's 30%. 3,000 out of 10,000. That's 30% debt utilization. So when we are, are fixing our credit, we like to have less than 10%, 9% or less as far as debt utilization. So you can see that between payment history and debt utilization, that's nearly 2/3 of your credit score. These are very important data points. That's why whenever we are cleaning up our credit and looking at our consumer report, it's very important to focus on these 2 data points and clean up these 2 data points as best as we can, because it's going to have a significant impact on your credit score, right? The third data point, of course, is your age of accounts. That's 15%. That's also a big one, right? And the age of your accounts is just the age from the date that the account was opened to current. And, that is your age of accounts. If you have multiple accounts, it's going to be the average of the accounts and the cards, right? So that's 15%. That's also a very important data point, right? One way to add age to our account, of course, is to get an authorized user trade line. If you have a friend or a family that can add you on as an AU on their primary credit card, and say they have a like a $10,000 limit and like a 10-year card, that information would then piggyback and be reported on your consumer report. So that's huge, right? That could add quite a bit of age and limit to your account. That's one way to finesse that area, right? So the fourth data point is the types of accounts. This is 10%, right? And this is, you have revolving accounts and you have installment accounts. Revolving accounts, of course, is a credit card or a credit line, right? Installment accounts are your monthly payment accounts. A student loan, an auto loan, a mortgage, a personal loan. So it's good to have a different mix of these types of accounts on your consumer report. And the fifth data point, the last 10%, of course, is new credit or inquiries, right? And so there's difference between soft inquiries and hard inquiries. Soft inquiries is when you go to, Credit Karma and you check your credit for free. That's a soft inquiry. That does not affect your consumer report at all, right? Hard inquiries is when a bank or a lender pulls your credit to, finance you for a credit card, a loan, a mortgage, whatever the case may be, and they pull your FICO score, and that gets counted as a hard inquiry on your credit report. So again, it's I like to say, no more than 3 inquiries on your credit report per credit reporting agency: Experian, TransUnion, and Equifax. Also, credit reports stay on your inquiries stay on your consumer report for up to 2 years, right? So, if you have a couple of inquiries that are, a year and a half old, and you have a couple of inquiries that are, 30 days or 60 days old, also factor that into the equation, because they're spaced out, and it doesn't look like you're desperate for credit. So that is the basics of your credit score. Remember, it's your credit score is just a function of your consumer report. So when you're repairing your credit, you want to focus on your consumer report and the 5 data points that are involved in that. So thank you guys for following. Remember to hit that like button, smash that subscribe button, leave a comment. It helps the algorithms. Check out the links. We have ebooks, e-courses, disputes, trade lines, everything you need to do it yourself. Of course, if you're interested in one-on-one, we can do that as well. Last but not least, to my son, Josiah, son, you are blessed, you are anointed. Remember to use credit responsibly, build business, invest in real estate to your success. Salud.